Welcome to Global Money Talk, brought to you by SamProTV. Greetings to all of our viewers from across the U.S., Korea, and around the world. We're coming to you live from the floor of the New York Stock Exchange in New York City, the financial capital of America. I'm Remy Blair, and joining me today for our market briefing and to weigh in on the top stories of the day is Tai Wong, independent proprietary trader. Tai, good morning, and thank you for joining me today.
Oh, good morning. It's another nice day out here, and it's National Fluffernutter Day. Did you like fluffernutter when you were growing up?
So for those of you who don't know, Tai will tell you what a fluffernutter is.
So fluffernutter is a sandwich made by marshmallow fluff and peanut butter, and there's big parts of this country who really, really like it. Sounds a little strange. Personally, I'm a peanut butter and jelly man, but fluffernutter is it's a good, it's a cute sandwich.
It is, and if you think about it, I believe most people might be familiar with peanut butter in a jar, but the concept of marshmallow fluff in a jar, that might be a little foreign.
Yeah, it's a little strange. Sounds very processed, but every once in a while, give it to your kids. They'll like it, and then you can blame me for having a lot of refined sugar.
Well, it is a American treat, and it is something that you might want to try once in a while when you have a hankering for something like that. Yeah.
And if you're not a fluffernutter fan, it's also National Salmon Day. So salmon is always like the popular sort of fish for when you're entertaining, because it's easy to cook and pretty. Yeah, nobody gets offended by it. So it's a good day. It's a foodie kind of day today.
And speaking of which, we are keeping our appetites up today, and we are seeing the market higher as well. But this does come after the sell-off we saw in the previous session, where the Dow fell by nearly 400 points. So let's dive into the topics that are dominating the headlines. And I think a good place to start today will be in China, since they have come back from their holiday, and there are some expectations overnight, weren't there?
There were, and just as a little bit of a precursor, they knew, I think the Chinese authorities and the Chinese banks and brokers knew that they closed a week ago in the middle of one of the biggest rallies they've seen in probably in a decade or so. And they knew that I think we talked about on the show, the animal spirits, at least on the trading side, have really been woken up. That people are looking to borrow as much money as they can to invest in the stock market, when now all of a sudden they see lots of opportunity. As a matter of fact, on Monday, which was still a holiday in China, a lot of banks and brokerages and the exchanges were actually open to test all their systems, which is really smart, because they knew that there'd be a crush. They didn't want things falling over. So really kudos for thinking about that. The Hong Kong Monetary Authority actually reported huge borrowings from their discount window over the past couple of days, because there were so many people trying to withdraw funds to put into trading accounts that they needed just to go to the discount window to just get some liquidity. Not like they were in distress, but it indicates how many people were really into it. So the big so they come back to yesterday, and at 10 o'clock we talked about it. They had, the policymakers had this press conference, and the summation from Bloomberg, the National Development and Reform Commission. They said Chinese officials said they were confident of reaching its economic targets this year, and promised further support for growth, although they held back from unleashing more stimulus. And the market sort of went, oh.
I know, there was disappointment overnight because expectations were so high.
And it's sort of, we're going to hit our 5% target today. And most of the market goes, yeah. Half the market thinks, it's an artificial number. And I don't even want to get into that, whether they actually are growing by 5%. But that's not what the market's worried about. The market's worried about the direction of this really, really big boat. And this really big boat, I don't want to bring the Titanic, into it, but a big boat that has a small rudder and is actually really hard to steer. And they really wanted a lot of stimulus, and they didn't get it. Now, this morning, Evercore came out and said they think that the Chinese are holding some dry powder for stimulus in case Donald Trump wins, and he comes out and rails against China and puts on bigger tariffs, and they'll need that additional push. interesting, and it'll get some headlines, and hey, we're talking about it, right?
Yeah,
I'm not sure that's true, but let's take a look at let's look at graphic 1, which is an amazing chart. So if you look at let's look at the left side of the chart. That's the benchmark, the Chinese benchmark, and so I pointed to the green bar, which was September 30th, and then October 8th, which when they opened today overseas, this is a huge red bar after a lot of green bars. Rarely do you ever see a chart like this, and what it says is it opened on the highs, and then that sort of disappointing press conference came out, and it actually, when I was watching this around 11 o'clock last night, it was a bigger red bar, and so it opened high and collapsed, probably 10-12%, and then rallied a little bit in the late afternoon session. This is a very, very unusual chart where you get, does this say this is going to be the top for a while? It might signal that, really. And then on the right hand side is the Hang Seng. And the Hang Seng, you can see that the Hang Seng dropped 9.5% yesterday. You can see that that red bar is the Hang Seng drop, and they dropped because they were actually anticipating where the Chinese stocks were going to open, and the Chinese stocks actually opened and then dropped much lower. So that's why you see that big drop in the Hang Seng. Very unusual charts. You're going to be watching this for quite some time, and I just thought it was worth showing to you.
Yeah, and Tai, I'm glad you brought up this chart, because when we woke up this morning to look at markets overseas, we saw that difference, right, when it comes to the losses for the Hang Seng versus the Chinese index. That was quite a difference heading into today's session. And of course, as you mentioned, it came on the heels of the disappointment because expectations were high that we would get something from the Chinese government.
Yeah, I think they do need something to really... We're going to change. I think they're going to have to make adjustments to the economy fundamentally to get them out of this funk. And the trouble with an authoritarian regime is people don't necessarily always tell you what you need to hear. So you sort of have to experience the pain and the yelling and why. What the standing committee may be asking in a week's time, why are the markets down? And they'll be like, well, they were expecting a little bit more. And that's how I think messages get across, where you don't have the freedom of speech and, that democracies and much of the West have. And it's loud and it's messy, but messages get across a lot faster, and your advisors may tell you things that you don't want to hear. And I think in an authoritarian regime, I think Putin actually, just a sidebar, Putin was a victim of that when he invaded Ukraine. He thought he'd be walking in Kyiv in a week, and it's been 2.5 years. It's been terrible for both sides in terms of casualties and human losses, but he didn't get good advice, and we'll wait to see if the Chinese government gets good advice in terms of their economy. On that note, actually, I want to show a couple other graphics. Let's go to graphic 2. And this is from a guy named Brent Donnelly. I heard him speak, and I get the free version of his newsletter. And he runs a newsletter, Spectrum Markets, and he had something the other day that I thought was really, really insightful. So this is a quick look at the Western stock markets, the NASDAQ, the DAX, the Toronto Stock Exchange, and the FTSE for the last 12 years or so. And you can see, there are blips and and dips, but generally they all have an upward drift. So they all rally over time. The NASDAQ, probably the best of all of them. You could argue that that's because American tech is so good. So just remember this chart, upward drift over time. So let's go to graphic number 3. And you'll see this is the Shanghai composite from 2011 till now. And Brent compares it to, whereas instead of the Western stocks, these actually look like meme stocks. And you can see Dogecoin, and you can see, I think it's GME on the right-hand side, that you get a big spike, and then they kind of drift along and, doesn't do much. You get a spike and they don't do much. But what's important is you don't get that upward drift. And I think this is directly, and you actually see something very similar in the Hang Seng as well. If we look, I didn't bring up a chart, but when you have sort of sort of a lot of freedom in the economy. People can invest in what they want to invest in, and companies can make investments without worrying about the government, without the government saying, "Oh no, you can't do this." Alibaba, you cannot be a financial company. That Ant thing was supposed to be their big financial move, and they could be, like a big bank or a credit card company, and that got squashed. When you squash those types of animal spirits, that's what you get when they don't have a natural upward drift, which you should in a stock market, because inflation and prices go higher, so your stock market should go up over time, all things being equal. We don't see that in China. So it's something that really worth thinking about, where it's a different government regime, and it makes a difference over the long term. Early innings yet. Don't discount the ability of the Chinese government to do something dramatic if they need to, but they're going to need a little bit more than what they've shown so far, is what the markets are telling us right now.
And I think it was a good contrast to see the differences between those charts that you presented. And you're right when it comes to concerns about the bigger picture. When it comes to the Chinese economy, there's still concerns on the heels of the stimulus measures and other measures that were announced last week as we head into the rest of this year. So we'll have to keep an eye on what happens, and if there are any measures that come out as we move forward.
The Politburo meets again in October. They may even have another December meeting. And if they think they need it, if they're convinced they need it, they will do something. But are the messages getting through? And I think the stock markets in the Far East are going to be very volatile. There'll be a blurb of a good news, and it'll rally a couple percent, and then it'll get disappointed, it might retrace 3%. I expect a lot of volatility as the market tries to sort this out.
And speaking of volatility, I think it'll be a good moment to do a quick market check, especially on the heels of some of the pullback we saw in the equity averages yesterday. So this morning in New York morning trade, we did open higher. We saw the Dow Jones Industrial Average dip slightly below the flat line, but right now we are above the flat line, up by about 30 points on the session. And this does come on the heels of that rally to record highs we saw at the end of last week. Now, in terms of the NASDAQ Composite Index this morning, it is higher after closing lower yesterday. It is up by over 200 points and up by 1%. So we'll take a look at some of those Mag 7 names today, because we did see a sell-off in the previous session. And of course, the S&P 500, let's take a look to see where we are this morning. It is higher by about 0.7% this morning. So, Tai, given that we saw that pullback in U.S. stocks yesterday and the rise in yields, we saw the 10-year yield above 4%. Right. It is still holding above those levels. So what do you make of the price action we saw in stocks as well as bonds and, of course, crude oil?
So starting with stocks, I think what contributed to the late sell-off yesterday was, I think it came out maybe a little bit after noon, that a federal judge put an injunction on what Google could do. And it's because they lost an antitrust case against Epic Games. I think it was they're not allowed, they had to make the App Store, their App Store, Play Store, I should say, accessible to other developers, so they could develop things that to compete. They could no longer pay developers extra to only show stuff on the Play Store, and I think there might have been one other thing, and they couldn't prevent device manufacturers from putting on somebody else's Play Store, and these remedies are on for 3 years. And that hurt. Google made, I think, $12 billion or whatever it was from their App Store last year. So this is going to hit them a little. This is going to hit them, a bit for sure. And it certainly hurt the mood in Google. I think it hurt the mood for the stocks in general, because they're one of the Mag 7. Plus the uncertainty that we had yesterday, still trying to figure out where the Fed is after that big blow-off report on payrolls report on Friday. So in terms of, so I think we're bouncing back a little bit today. But Google is one of those things where sometimes, and like Apple, you can be a leader and a winner, but maybe leave a little room for the competition, so the Department of Justice and the antitrust folks and don't get into your business as much. So leave a little room for the competition. It seems to be maybe the best advice, but I guess when you're the leader, you want to keep you want to make sure you stay the monopoly leader as long as you can. But to your question about crude has had, and this is in part related, I think heavily related to the disappointment in China. Crude's had a 3 or 4% pullback today. It's the biggest pullback we've had since the Iran ballistic missile strike on Israel.
Yes.
We are still waiting on Israel's response. Don't know what's going to be, don't know if it's going to be military, the oil field, or nuclear. And I think crude probably shouldn't be this high given where demand fundamentals are, and especially if China disappoints, that's an automatic reaction to take a little profit in crude oil. I think it remains elevated until we see the results of what Israel is going to do. In the meantime, they're attacking the Gaza Strip again. Hezbollah is still getting hit. I think Hezbollah seems to suggest that they may want peace because the leader who was killed, I think, was also killed. And at some point, you no longer want to raise your hands to be a leader if you just keep getting targeted. So we're seeing a pullback in crude, and I think that's actually also affecting gold. Gold has been under some pressure, down about $60 over the last couple of days. Silver getting hit pretty hard as well. And I would also add that it just came out the other day that the People's Bank of China, for the 5th straight month, did not buy any more gold. And they were instrumental in driving gold up here. So the last time they bought gold was in April, and the price around there was, I think, about $2,280 an ounce. So I would think that we probably have to get back below 2,300 or so before the People's Bank of China decides to add. Now, I don't think we're going to get down there in this correction, and gold doesn't have the feel that it's going to collapse. It really doesn't. Now, if the Fed if we get a very perky CPI number, and you get Fed speakers coming out and saying, we might have to rethink if we have to move in November, that may be enough of a trigger. But right now, I don't think we're going to get down there. So I think the Chinese are going to remain relatively quiet. Maybe we have a short-term high in gold, but the sentiment is still very good. It's still sort of a bull market. One thing I would add is we talked about buying platinum at Costco. I haven't checked the prices recently, but platinum has dropped fairly, probably $50 or $60 since we last talked about it. And I would think that Costco really, the way they work is if prices of their goods come down, they'll they'll take the prices down for the consumer as well. So they were out of platinum bars last time. I'll have to check after the show if they're still around, maybe a little bit cheaper.
And we're starting to see some headlines about how gold bars at Costco are selling out given the run higher for gold. But as you mentioned, when it comes to central bank buying of gold, this is something that Tai has spoken about, and if you want to learn more about it, you can actually go to one of Tai's market insights on gold. But when you think about how much gold has risen this year, the value of central bank holdings is higher just given this value increase.
At least 30% higher if you didn't add to it in the middle from last year, because gold's up almost 30%. It's a phenomenal move. But it's a move, it's a single commodity. Single commodities can really roof. I mean, my favorite example is silver, which went to 50 in 2011, and parked there for, I think, even less than a day. I'm not sure it even closed above 50. Was down below 40 a few days later, and then we haven't seen it back at 40 in years. So it's a great year for gold. Is it going to be a great year for gold next year? Kind of hard to say, but right now, I think you can be long or flat. It's tough to be short right now. I think if you sell gold right here, it's because you're long, and you want to take a little profit. Or if you're a scalper and you'd say, oh, I want to sell it here and try to buy, for $10 lower, which we call people who try to, get a little bit of money in the market, and there's room for that. And they add to liquidity and the programs who do that, and it's all good, but this is still a bull market.
And because we mentioned Costco, I do want to shift our focus on what's happening in the southeast of this country, in particular down in Florida. So Hurricane Milton, since we last spoke yesterday, it strengthened into Category 5. It is currently a Category 4, but it is forecast to make landfall in Florida. So expectations for this storm are detrimental for the residents who are living on the west coast of Florida. What do you make of what we're seeing as we head into the rest of this week, Tai, and what are your concerns?
So, one thing that I realized over the last 24 hours is I am a terrible meteorologist. I think it was yesterday that I talked about Milton. It's a small but powerful storm, and it's not as big and as troublesome as Helene, and it'll hit Tampa probably and cut across Florida. It won't be awful. Well, that storm strengthened unbelievably in about 16 hours. It went from a category, I think it might have a category 2 to a category 5, and there's suggestions that before it hits Florida, it'll strengthen again to the top of the category 5 area, which is 192 miles per hour winds, and some people are talking about a category 6. So hopefully it weakens and it's not as terrible. But right now it looks like a really big storm headed straight for Tampa, which has a lot of expensive real estate, a lot of people, and then it's going to cut right across Florida, go over Orlando, which is our support team is in Orlando. So hopefully you guys take care of yourselves and God, you do what you got to do. But I think the mayor of Tampa said, listen, if you are, and she said it very plain, which is great. If you are told to evacuate and you don't, you're gonna die. And they told people once again, use Sharpie. If you're not gonna evacuate, use Sharpies to write your name and identifying information on your arm so we can identify the body. So Florida, I think a lot of people are evacuating. Because they've seen hurricanes before, unlike, poor North Carolinians never saw it really coming. But Florida's seen this before, but it's going to be very, very significant. And I think over time, it's going to accelerate. We've had a big migration into the southeast over the years, particularly Florida. But now you've got to think, if you're a Floridian or if you're thinking about going down there, wow, a lot of storms, a lot of flood damage. Can we, insurance is high and going higher. Is this going to blunt the migration into at least Florida? You'd have to think that on the margin, if you're going to retire, you're going to say, am I better off in Georgia? Am I better off in South Carolina, where, we don't get these monster storms that could, maybe unlikely, but if they hit, they'll wipe you out.
Yeah, and there are a lot of concerns for the southeast as well as Florida ahead of this hurricane. And as you mentioned, the southeast is still trying to recover from Hurricane Helene that hit the region very recently. And it's very interesting because we have less than 30 days until the presidential election to see how some of the conversation has become political, what's going wrong in terms of government support, government aid in particular when it comes to FEMA. So, when it comes to natural disasters, we know that evacuations are important if you do get a warning ahead of time. But of course, it's very interesting to see how political this issue has become when it comes to recovery.
I guess it's inescapable because we're in the middle of a political season, and it's angry and aggressive, and people are divided and polarized. If you remember in 2005, the response to Hurricane Katrina, or the suggested lack of it, which I think was probably not correct, not accurate, destroyed George Bush's administration. He was a lame duck after the fall of 2005 and Katrina hit. And now, you're getting people who they call it the Redneck Air Force, which is just flying helicopters in and out of North Carolina because the FEMA can't get there. So will it matter? And we looked at the election yesterday. It's super duper close. It may well matter, and maybe it'll hit in ways that we don't know. Whether you get fewer voters in Florida or fewer voters in North Carolina. Can people actually vote there? And they're already making, like in North Carolina, they're saying you can vote outside of your county now because some counties are just wiped out.
Well, we will continue to monitor the hurricane as well as the markets when we return tomorrow. But now Tai will be taking my seat, and after the break, Tai will be joined by Danielle DiMartino Booth, the CEO and Chief Strategist at QI Research. So don't go away. I'll go have a peanut butter sandwich. So good luck, Tai.
Enjoy.
Thank you.